like a shadow king. Candlesticks dance where the prophets sing. Pivoting breakouts, his gospel's clear. Mean reversion whispers what no one hears. Opening range, he strikes the key position right where the games will be. Market wizardly. Every tech bend says decree. Forex waves obey the sea. Bow down to the market structure trader. Indices tremble when his cursor flies. Fibonacci lines cut through the lies. Algorithms falter at his stare. While rookies gamble, he's prepared. Risk is locked and the stops are tight. His strategy hunts through the dead of night. Market wizardly. Every trader prophecy.
Morning all, how are we all doing? Happy Friday. It is Friday at last, which is great. We like Fridays. Excuse me. I've got a really bad neck at the moment. I've pulled my neck. So if I look like a robot today, that's why. Really like 3 days now and I'm like this. Can't turn my neck. Really annoying. You do everything with your neck. Literally everything. Right. So it's Friday. DAX is open. So we're going to have a look at the DAX. Morning, Baggy. Morning, Wozcheck. Morning, Dallas. How are we doing? Good evening. So DAX is open. Previous close on the DAX has been done ORB, so on the opening range. So that is all useless to us today. Previous sessions. So we've when we close within sort of similar gap, similar open inside, the statistics are pretty average, 46% chance of hitting either the session high or low because we're kind of inside bar today. So could go absolutely anywhere today. There's a big sell-off happening at the moment on indices, NASDAQ specifically. The talk is that this is the next bubble to burst, kind of the AI bubble, if you like. Which is to do with software, because obviously AI is basically now at a point where it's coding itself and evolving itself, and obviously software is irrelevant now because you can build anything you want coding wise within seconds, minutes. People are building games. I was watching a video yesterday. Somebody's rebuilt Fortnite in a week using 6 AIs. There's nothing really you can't do with software now with AI. So all the AI firms, anybody that provides data, Thomson Reuters, for example, lost about 20% of their share price because people are just building their own systems now. So there's a decline, very quick decline in the NASDAQ at the moment because it's tech stocks. So the forecast for this is not good. If you look at where we are coming to a critical point, I would say probably this week, next week, which is this 200 moving average. When we get a sell-off, which lasts typically around about a month, we then either go into a 3-month accumulation or pullback, bear market. On bad case scenarios, obviously, we'll have a big correction and big collapse. We haven't had one for a while. I posted about this the other day, but obviously the COVID collapse was the biggest bear market we've had. Typical bear markets last 3 months. Obviously that was Trump, but still 3 months. So we are pretty much coming month one. We've had this weird thing where we had the drop and then accumulation. We don't get this pattern. Doesn't happen. It's either a flag or typically it is a correction. Excuse me. Having a pullback into a range, not normal. So this isn't normal, and nothing's normal in the markets at the moment. Obviously, gold's made sure of that. But you can see that this is the first time we've had a 3-month rally or 3-month attempt to make new highs, and we've failed. So what they will do is they will come and test the previous low of that rally and see if we're in a bear market. If we're in a bear market, we'll break it, and then we will go down for 2 months. It makes total sense with what's happening with AI. We're at the singularity point with AI now, where it's coding itself, and there is this kind of chart, if you like, of human understanding of artificial intelligence, and artificial intelligence has hit it. So basically here, we don't understand it because up to this point, we have been able to watch AI evolve. We've been able to watch AI grow. We've been able to control AI, program AI, and guide AI. This is the point which is called the singularity, where AI surpasses human intelligence. It's now cracking everything we've tried to crack in weeks. Yeah, stuff that we set it to do that scientists are like, this took us decades to work out, cracks it in a week. Yeah, its intelligence is beyond us now. So this is the point where it becomes dangerous for any IT related business. Sorry, I'm frog in my throat. To basically survive. People like Adobe, Microsoft, any large software organization is basically either using it or not. Claude, Anthropic, second largest AI company out there, are now using its own AI to code its AI. So developers are no longer developing AI. AI is developing itself. So for the software industry, what you're going to find is we've had this, if you think about how it is advancing, and then you think about stock prices, the same thing is going to happen. The speed that goes up, the speed that goes down. So I reckon we're going into a massive bear market. I wouldn't be surprised if it isn't of a similar size to the COVID correction. So looking at a 50% retracement, whether you pull it from Trump's dip, which would be there, or whether you pull it from the post-COVID rally in 2022, in which case you're going to be there, pretty much where we were. I reckon that's what we've got coming. So everything that happens in NASDAQ has a knock-on effect with the S&P and the Dow, because tech stocks supply industrial stocks and other business-related stocks. So this is kind of your leader, if you like. What happens here then tends to kick in everywhere else. And we're obviously seeing the start of this. This is Opus 4.6 came out today, for example, from Anthropic. It's 22% better than Opus 4.5, and Opus 4.5 only came out last month. Yeah. So this is the speed it's happening at. And this is not going to be something that software companies are going to be able to keep up with. So we're seeing this drop here, which potentially is going to be the start of that move. So I'd be looking for shorts on all stock indices at the moment. I'd be very wary about trying to take longs. If you look at what happened with the DAX yesterday at the open, which was here, we had that immediate drop down. If you look at what happened with the NASDAQ and things yesterday as well, what we had at the open was an attempt to rally. And then again, we dropped back down again. Or was it back there? Sorry, which one was it? That was news, wasn't it? No, that was the open there. So we had that attempt and then we just couldn't get anywhere. So just be aware of what's going on fundamentally, because obviously there is a big movement happening at the moment in the AI world with lots of things. You can now have your own AIs. which you can train yourself as well. So obviously a bit of technical expertise needed, but it basically means unlimited employees. Unlimited employees, which are more intelligent than human beings, means anything to do with the computer or software is not going to survive. So tech stocks, 100 of them, they're all in big trouble. So, and don't forget, they all supply these other industries as well. Defense, yeah, all the tech that supplies defense. Defense can now build its own tech, not needed. Yeah. So you're going to find a lot of changes happening over the next month to 6 weeks, and obviously this year. So we will see where we go. But yeah, bearish stance on all stock indices at the moment. Just a quick look at gold and oil. The oil trade for those members that were with me on Monday. We traded the oil gap fill, which played out beautifully. I couldn't quite work out what happened with my TP on this. I got TP'd there. My TP was there. So I must have got slipped somehow because price never actually touched my TP. This is unusual. Normally what happens when you get near your TP is they go, oh, we don't want to get them TP'd. Let's see if we can get a chance of them coming back down so we don't have to pay them out. But no, I got TP'd there, which was weird. So yeah, the oil trade, it didn't quite make the gap fill, but that trade actually TP'd, which is odd. But anyway, out of it. So that was a nice little gap fill play. And obviously gold at the moment, we know what's going on with that. We've had the, as you can see with ATR. So I've switched over here to ATR3, which is basically ADR3. And we are coming back down that little pullback spike there where we had the ATR increase. We're coming back down towards normal levels. We're not far away now. Yeah. So next week, assuming that we continue to sort of contract more, we'll be back down to normal trading ranges on gold. The decision now is, are we rallying to 6,000 or are we going to start that massive pullback? This was obviously potentially that move. So if you look at it yesterday, a lot of people in a lot of places were shouting for shorts because basically this was a 50% retracement on the correction. So you would then expect second leg down of market structure. Yeah. So a lot of people are looking at it in the opposite direction, saying we came back down and we tested the previous month's high and they bought it. So people are now looking for that. So whichever camp you're in, you are either, today is your critical point, you are either well on your way to next leg up or well on your way to next leg down. So you need to flip a coin and pick a direction on gold. It's going to one or the other, isn't it? We're either going to retest this high and jump off to 6,000 or we're not going to be able to do that, which means we're probably going to come and test this low at least, but probably break it. So I'm not trading it, not after last time, because I got out here and it did that. So yeah, you make your decisions on gold. It could go either way, couldn't it? It's very difficult to call. Right, let's quickly look at DAX. So DAX today, very large opening range today. 89, which is tradable. So if you're trading ORB, you've broken short on the DAX and you've probably actually already stopped out on that one. Maybe not. Don't actually have my terminal. Just open that up. So yeah, so see where we go from here. Your 10-minute range and your 15-minute range are the same today. So if that was a stop out, yeah, it was a stop out. So so DAX short break has gone, stopped out. So the next, obviously, range you've got is your 15-minute ORB there. So that will be your next break to the downside or upside. Obviously, target-wise on this today is fairly simple. Downside breaks, you're targeting previous session low. And that is also last week's low, which we sort of just about tested yesterday. Upside targets, obviously your previous session and daily highs, which are pretty much the same level. And you've got a couple of upside resistances. That's post-market. I wouldn't pay too much attention to that. But this one here basically is this level here. So this propulsion move to the downside is what they resold. So that is going to be your upside resistance short term. But that's where I'd be looking to go. So don't forget, if you look at a daily chart on stock indices, 91% of the time we have an outside bar or a higher high, higher low, meaning that we either test and break the high or we test and break the low. There is about a 9% chance that we will form an inside bar, which means that there is a 91% chance of achieving that or that today. So if you're going to go long to there. If you're going to go short to there. There's no point in going long or short and getting out before you get to those levels, because there's a 91% probability we're going to achieve them. So always think about where we're going on a daily basis and where we are today when you're trading, because obviously if we're going to put in a higher high, you have to do that. If we're going to put in a lower low, you have to do that. Yeah, we only do an inside bar 9% of the time. Yeah, so you've got 91% probability of achieving those two. So bear that in mind, whichever way you decide to go. Right now, we've got a propulsion move to the downside, obviously. So your first 15-minute candle is bearish today, although obviously there's a big downside rejection out of that propulsion gap. So it could absolutely go either way today. So if you're going short, obviously it makes sense to use the open as your target. Downside, previous session, yesterday's low gives you a 1.4R. If you're going to go long, makes sense to use the ORB of the 5, 10, 15-minute range. Your upside target gives you 1 to 3 to the upside. So if you want to hit the button right now while we're within the range, it's flipping a coin with a 50-50 ratio with a positive 2 or 4R in it. So in fact, what you could do is basically hit long and short now, put a stop above those levels. One of those orders likely to go to those targets. You want to do the maths? That'll work. But yeah, those are your options basically. So tricky one today. Inside bars with not a massive amount of distance. And the open is very indecisive. I would be waiting for some kind of break of those. Some confirmation. We've got some direction basically at the moment. At the minute we're kind of just potentially in a range. So we'll wait and see. Kimmy, new AI from China. There'll be loads of AIs from China. AIs are spawning AIs. This is the trouble. ORB might do extremely well. Yeah. So opening range breakout this week has been fantastic. Because we've had lots and lots of volatility and big moves. Yeah, we had multiple ADRs. So ORB will work really well in a bear market because bear markets are aggressive. If you look at bullish and bearish markets, bull markets tend to be very, let's just look at the NASDAQ, probably better. Bull markets tend to be very slow, very steady. Yeah. So you go up gradually, you have little pullbacks in there, but it's very slow and steady, and you get quite a few range days in there. Bear markets are massively fast, massively aggressive. Yeah. Because the market is long always on stock indices. So markets will always buy stock indices. It's a long only strategy. 90% of people that trade this trade long only. They don't short it. Yeah. Because it goes up. It's manufactured to go up, isn't it? Used to be. I'm not convinced that's going to happen now with what's going on with AI and how it's going to affect businesses. I'm not convinced that businesses, a lot of these big businesses are going to be able to survive this because yes, you can cut your costs, but there's no point cutting your costs if nobody's buying your products. Look at Thomson. Thomson Reuters provide legal data services. Yeah, those companies can now build AI software to do this themselves. Why would you pay tens of thousands a year to a data research company when you've got a bot that can do it all for you? Yeah. And I'm talking tens of thousands a year, some hundreds of thousands a year paid to Thomson Reuters for data analysis and edges and information, all that sort of stuff. It's all out there. You can build it yourself. Why would you pay someone to do it? Yeah. So their business model is not let's cut costs by cutting staff. It's how the hell do we keep our customers? It's a big shift. So these markets tend to be fast. Therefore, they suit breakout strategies because breakouts will be quick. Yeah. You see it. We've seen it many times. Yeah. That is the move. Look, bang. Bear markets are aggressive. They're volatile. So you're going to get fast movement. So getting those ADR hits is definitely doable. We'll have multiple ADRs. So ADR is 528 on the Nasdaq. Yeah. So if you look at the last 3 days, we've got 800, 720, 640. Yeah. ADR is 528. It's 3 ADR days in a row. There's another one there, 770. Yeah. So far today, we've put in 50% of ADR in the Globex session where no one's trading. Yeah. There's a lot changing at the moment. So we'll have to wait and see what happens. But one of those pivotal moments in human history. Yeah, they're calling it the new industrial revolution, but I think it's way surpassing that. Yeah. Warp drive. It's not going to be far away, is it now? All the stuff that we can't do as humans, get it to do it. And if it can't do it, get it to recode itself so that it can do it. But in fact, don't get it to do that. It will do that anyway, won't it? Right, it's good long. So we just broken ORB highs. The 5-minute range high has just gone. Partial target on this today will be up here. Try and look at it where it is. It's there. So that's your partial target today, which is 2R on the opening range move. So we'll see if that holds. But your ORB today, that's going to stop out immediately. Your ORB today, your stop loss is basically right on top of that propulsion gap. You can't get much worse of a stop loss. First thing they're going to do is retest that propulsion gap to see if there's buyers there. So that's not a great ORB today at all. But that is your 2R target to the upside. Right. News-wise today, we were meant to have non-farm payroll today. We're not getting the unemployment rate today for the US. Trump was speaking last night. Ow. Just quickly see if he said anything. Oh, so another thing that came out last night was I haven't got full news. Let's reload it. Come on, where's the news? There we go. Hurry up. Right, here we go. So FX. Bank of Japan is closely monitoring FX market moves and their impact on economy and prices. Yeah. Remember, every time the Bank of Japan say this, they are threatening intervention. Whether they do it, whether the US does it, it's irrelevant. This is a threat of intervention on the yen again. Yeah. So if we look at the Japanese yen, specifically US dollar yen, yeah, intervention. You're not listening. Massive intervention. Yeah. So remember, I keep going over this because it is like clockwork. It's just the pattern. Yeah. We get the warning shot. You do not listen to the warning shot, you get shot. Yeah. It's the same every single time we get an intervention. Yeah. You get the warning shot and then you get shot. You can go back as many times as you like and look at every intervention the Japanese have ever done. It's the same pattern. had the warning shot. You're not listening. Yeah, the next one's coming. They are closely monitoring this because, as I said, this level here, 160, 162, is not tradable. We cannot survive as a Japanese trading partner with the US if you push price above that level. We will have to do something about it, and they will. So we're back up here. If you look at the pullback that we've got at the moment and measure the pullback on the actual intervention move, we've gone beyond the 61.8. Yeah, this is bigger than a normal retracement, and we are coming straight back into that propulsion gap. So that was your initial intervention and follow through. This is where we should be paying attention as markets to, yeah, no problem, we won't keep devaluing the yen. If they do keep devaluing the yen, the next one's coming in. So if you want to start building a short, you can plan to build a short up to 162. So where we are here right now, up to the 162 level is 550 pips. ADR is 172. Yeah. So you're looking at 3 ADR. Yeah. So if you started hitting short right now on this, where we are now, you're going to be in somewhere around 4 to 5 trades, depending how the market moves, when you get to that level. Yeah. So you'll have a position on with 4 or 5 trades with an average somewhere around here, if they push 162. Yeah. And then if that intervention comes, you know what you got. Yeah. So just bear that in mind. We've had the warning shot again this morning from the Bank of Japan. They're not happy at all. And they will do, they do. One of the only countries apart from the Swiss that actually do what they say. Speaking of that, Swiss unemployment's just come out. 3.2% down. That's good. I've just seen if Trump actually said anything interesting this morning. Doesn't seem to be anything. So he was forecast to speak, but didn't say anything. So today we've got unemployment rate for the Canadian dollar at 130 an hour before market opens. So just be aware of that. We've got Michigan still at 3 o'clock. Michigan does move the market. So potentially we might see some movement there. Going to stop out on that DAX. Market's dead. So we're waiting for a break, basically. Directionless at the moment. That's a stop out on ORB long. So the 30-minute ORB, when that candle closes here, is going to be the same again. So that will be a reset. So that'll be your, basically that's the 5-minute, the 10-minute, the 15-minute, and the 30-minute range today. We haven't got anywhere, have we? So reset, try again on the 30-minute break. I haven't stopped out on that, but because I was clever enough. This is where EAs are stupid, yeah? The EA put its stop loss here, right above a propulsion gap. Me, knowing about propulsion gaps, put mine below the propulsion gap, because if they're going to buy up the propulsion gap, I won't get stopped out. EAs, AI, is AI going to be clever enough? I don't know. Stopped out on long. Okay, so that will be my re-entry. In fact, I will probably keep my stop roughly in the same place. You don't have to use the entire range for stop loss. If it's going to break, it's going to break. Yeah. So we'll be off up to there. So there's still a 2R long available. And to the downside, probably use those highs there. To the downside, we're looking 1.7. Maybe move that down a little bit, give yourself a 2R short. Somewhere around there. So it's more than 50% of that. In case, if it breaks out and pulls back, 50% of the leg it puts in, which would be from here. Yeah. You should be safe there. Short. But we'll see. It's not going anywhere at the minute, is it? We'll come back to that. ADRs, there's no ADRs today. so far. Weekly range is obviously gold and silver. Yes, everything off the charts, but everything is done pretty much its weekly range this week. We've had a big week this week. Monthly ranges are already in for gold and silver. RSIs are flat on the 4 hour. Pretty much everything is undone itself. Yesterday as well, we had news for the pound. The pound basically, it's recovered nicely this morning. I missed my exit again. I had a break-even exit here, and I didn't take it. And then the news hit yesterday. God, I was asleep, obviously. I had a second exit on it. I should have put hard TPs in. That's my break-even on this. So we had this big move down, but luckily it's gone range-bound by the looks of things. So on the pound, because the pound basically, the votes came out, pretty much 50% wanting a drop. So we were expecting the vast majority to stay where we are, and a couple to probably want to change interest rates. What we actually got was one vote away from an interest rate drop. Yeah, so massively bearish. It means that there's a very, very, very high probability that next month we will drop interest rates in the pound. So obviously the market went, oh, okay, we need to short the pound then because they're going to be dropping interest rates. So they started scaling into shorts yesterday, but it recovered more than 50% of that move by end of day. And obviously we came back up again. So if that low breaks there, I think we're going to see a bearish pound moving forward. So if you look at the pound US, that stayed short yesterday. If you look at the other pounds, they all pretty much stayed short. So I think there's a good chance that we're going to see some weakness in the pound, which is annoying because I really wanted to get out of that this morning. I missed it. But anyway, so that was yesterday's news. Obviously weak pound potentially, that was unexpected. Lagarde didn't say anything about the euro rate, so euro rate as expected 2.15. No change on the euro. We're not expecting the Europeans to increase or decrease interest rates, as you can see yesterday on the euro. Dead. Yeah, so the euro is flatline. It's hit its interest rate targets, it's hit its inflation targets, it's all stable, nothing's moving, so therefore the euro is flatline. There is no reason to buy it. There is no reason to sell it. So whenever you're trading anything euro based, this is what's moving it. So the cross will move it, not the euro. So again, another confirmation that for the next month, basically, there's nothing happening on the euro. It's dead. So weakness in the pound, neutral euro. But apart from that, I was really annoyed because that ADP employment change came out massively bearish. So, shame we haven't got that figure coming out today, unfortunately. Short break on the DAX. So your 30-minute ORB is on the low of candle 2 here. Haven't triggered it yet. So there's your sell down to previous lows. That's a 2R exactly there. I've just placed a pending order there, so I'm going to just try and get in on a retracement. So we've got a propulsion gap basically forming here. So we'll retrace into that, and I should be able to get that limit order triggered. Saying that, it's going to put a propulsion gap now, isn't it? Yeah. Come on, just pop up a little bit. I don't mind putting a propulsion gap in, but let's just make it maybe that big so it triggers my order, and then we'll trade away from that. So I've got sell limit sitting there. So it's law. You watch. It's just going to collapse straight down to the previous low without taking me with it. So that's basically today's news. We haven't really got any. There's nothing much happening on the RSIs and ADRs today. So there's a few daily extensions which we've still got. I'm currently still in pound New Zealand, euro odd, and Aussie US. So Aussie CAD on the daily, it's just coming out of extension now, so that will turn off today. Aussie yen, it's just come out. Look at that, parabolic. Swiss yen, so obviously everything against the yen is extended. Excuse me. You've got shorts still on these yens. Wouldn't want to be going long on those. So euro odd. So that's had a nice pop up this morning, and I missed an exit on that as well. But anyway, so yeah, very nice big extension down here. We're either going to come back and test the 24, which means there is still a little bit more of a higher high available on that, or we're going to pull right back into the 24.72 area and maybe come and retest that previous weekly. That's the 2-week low here, which is above that propulsion gap. So there's potential for that to happen. Come and retest this area here. We have already tested it once. So we'll have to wait and see. Obviously, we need a weak a weak Australian dollar because the euro is not doing anything. So we need that gold price really to come down. I'm also in Aussie US. So that put a new low in today, which is good. So again, same story on this one, looking for a test of the 24. This massive propulsion move here is obviously that break. Yeah, so we broke that high. So this is where your buyers are going to be sitting in the 24.72 area if we're going to continue that way. Weakness in the dollar, potentially. Australian dollar, don't know. See what happens to gold. Nothing much we can do about that at all. So yeah, you've got a few extensions still there. Pound New Zealand just coming out of extension now. Really nice accumulation on this. But obviously pound potentially could be weakened now. So I'm hoping we're just going to sit sort of range bound on this for a little bit and wait for that 24 to catch up and then drive price down. So I will be getting out if we can retest this range high again. Got this little propulsion gap here that might get tested. Going to need weak Australian dollar, weak New Zealand dollar to do that. Pound odd, same thing. Sitting around at the moment. Lots of wicks, no bodies, completely directionless. Again, might sit around range bound, wait for that to catch up. We'll have to wait and see whether we pull back into that area or not. But yeah, so nothing much else happening, really. Everything's kind of playing out from previous. It hasn't triggered me, has it? Typical. So ORB is short. Your partial close on the ORB is here. So that is your partial close on the opening range breakout. If you're trading that, that's a 2R on the 30-minute break short. And obviously, target will be your previous session low. You're off. I'm not. Typical. So there's the propulsion gap. So hopefully we'll retest this. So in theory, you could actually reduce risk on that. If we're going to test that propulsion gap, that's your trade. So entry short there if you missed it. It's going to go parabolic down, isn't it? That's sod's law. Swiss yen, head and shoulders. What time frame you're looking at? Yeah, so yeah, nice reversal retest. So there's your reversal alert. There's your retest. That is your right shoulder. Break that neckline, off you go. That propulsion gap. So basically you're shorting straight into propulsion here. So obviously if you do short here, you're going straight into monthly high, weekly high propulsion break. Yeah, that is where they'll look to buy it. If this is still bullish, i.e. bearish yen, that's where they'll add potentially. So you want to, obviously you're trading short into support. If support breaks though, yeah, loads of room. You got loads of room. You'll be down 125 ADR easily. So yeah, it's a good short. Stop above. I mean, you want to stop above the high. Head and shoulders is always a stop above the shoulder, because if the shoulder breaks, it's invalid. So there's no point in putting it above the head, because if that shoulder's gone, it's not a head and shoulders pattern. So get out. Yeah, it's not a pattern. It's just an accumulation. So yeah, good short. But, you know, head and shoulders fail more than they work. So, but when they work, they work. You know, when a head and shoulders works, it really works well. But they don't work very often. The strike rate is very low on them. So, very annoying patterns. Yeah, you can wait for a break and retest. The problem is when you wait for a break, you don't know if it's a parabolic break. So it could do the entire move before you get in it. So if you wait for a break and then retest, yeah, you've got a very nice short, but your stop's going to be in the same place, probably, unless you're going to try and get in like that, which is fine. But I'm much more inclined to preempt patterns. If you see a pattern, the problem with pattern recognition is everybody can see pattern recognition in hindsight. The key to trading any kind of pattern recognition, if you want to trade head and shoulders patterns, any kind of 3-bar reversal pattern, or you want to trade Elliott wave or harmonics, Gartleys and things, yeah, the key to trading them is assumption, yeah. So if you see that and that, yeah, get in there. Yeah, you are either right, it's a head and shoulders, or you're wrong, and it's an accumulation break. Yeah, that is a better trade than getting in here with that, or waiting for it to retest and using that. Yeah, that is your tightest stop. Or when that bearish engulfing went in on that reversal alert retest, that is the best trade. Assume it's a head and shoulders. Don't wait for confirmation, because if you wait for confirmation, you're probably going to miss it. Like I'm waiting for confirmation of a break short on the DAX. I'm in now. There we go. So if that had just gone parabolic, I miss it. Which is why a pending order with the opening range breakout means you don't miss the move, because you are assuming we're going to break. The pending order assumes break. Up to you though. Obviously, I prefer to try and get into these things. Like I would be pressing the button on it now. So that is your closest upside resistance. That was all parabolic until here. So you're either going to hit this area here, this propulsion move, which is a break of these highs, and fail, and it doesn't become a head and shoulders. It's just a pullback continuation. Or it's going to work, and you're going to break through that propulsion gap, in which case then you'll probably come back and retest it, and they will find support or test this low here. So why not just hit the button now and do that? Because that gives you a 3R. If you wait for it to come down, which you can, and test that propulsion gap, there's your neckline break. So you're waiting to get in here on some kind of bearish price action. So by the time you've got that bearish price action, your stop's going to be pretty much the same as what you've got at the moment, except you've got less distance to travel, which means that your target reduces your risk-reward ratio. There is no right or wrong. That's just the way I see it. I'd rather get in early and be presumptive than wait for confirmation and take a crap R. But doesn't matter how many times you look at it, sometimes it'll work, sometimes it won't. That's the nature of the game, isn't it? It's a 50-50 shot. Every single time you take a trade, it's a 50-50 shot. That's all you have. What you have is the ability to create a positive R. Yeah. So you have no control over the direction of price. It will either or it won't. But what you can control is the risk-reward ratio and therefore the profitability of your strategy. That's all that you have available to you, is controlling risk. You have no direction. You can't preempt price. There's no pattern that is ever going to play out with enough strike rate that you're going to be able to predict where price is going because it's random. The only thing you've got is that risk-reward. With a stop loss, obviously. Without a stop loss, you can do what you like. Doesn't matter, does it? Out of interest this week, what has performed best for you, ORB or position trades? Position trade, I'm not position trading this week. I'm not taking any new trades this week. I've got out of everything but 3. So I'm in pound New Zealand, Euro odd, and Aussie US position trades. Pound New Zealand's pretty much break even. Euro odd and Aussie US are in a couple of % each. So my neck. I haven't taken any new positions on position trading at all this week. Until this calms down, I'm not interested in trading anything without fixed risk because I don't know what is happening with this market at the minute. This is not really normal, is it? So why has that happened? We know it's because of BRICS, but why has that specifically happened? Something has happened in the commodities markets that has meant that we are achieving huge slippage, which we haven't had before. And it's because obviously the volume, I think, is lower through this because now everyone in BRICS is using China. Yeah. So obviously the gold and Russia's got 50% of the world's gold stocks. So and they're now using them, not the US. So there's a lot less volume coming through here, and there's some big orders gone through, I think, which have slipped this back down very, very quick. This is going to affect all commodities-based FX pairs, Aussie, New Zealand, CAD. It's going to affect the safe havens, Swiss, yen. Yeah. So 5 out of 7 symbols, I don't know what's going to go on with them at the moment. 5 out of 8. US, pound, and euro, no problem. They're not going to be affected by this. But the others are. So I don't want to take any new positions at the minute until this has calmed down and I can figure out what is going to happen with this moving forward, basically commodities markets. The other thing is, obviously, we've just had an intervention on the yen. So I'm not really interested in position trading anything yen at the minute. Swaps are massive. And I do not want to be going long. And that is the only signal that we've had. So there's been no opportunity to trade the yen this week because the only thing you've had on the yen for the last week has been longs. I don't want to get in long on this because they just did an intervention. So if the second intervention comes in, I don't want to die. So can't trade those. So there's just no point in position trading this week until this is all blown over. I said this on Monday. It's just, you've got to wait for this to calm down and figure out what the new normal is, basically. And the other thing, obviously, is at the moment, we've got massive volatility in stock indices. So if you want to make money at the moment, you go where the markets are moving. Stock indices. Yeah. NASDAQ specifically, but all stocks, all US stocks as well. There's nothing really you can't make money out of on 5-15-minute charts on stock indices at opens because that's where the action is right now because the market's panicking. So you go where the market will panic. It will panic in stocks because they're risky. Yeah, what we're doing, we're selling off all our stocks. Why? Because we don't know what the hell's going on. You're going to find yen and Swiss movement as well. So Swiss francs probably good to trade. Yeah. All sorts of things going on at the minute. I have a pretty odd question. You have lots of experience in markets. Do strategies fade away with age, such that there come a time a strategy no longer works? Depends on the strategy. So, but yes, yeah. So what happens with strategies is market regime changes. So if you look at, let me just switch this back to ADR 10. So if you look at this as an example, yeah. So 90% of the strategies out there, and this is the reason strategies fail, is not because of the strategy, it's because of the way the strategy is constructed. Who's constructed it, basically. There's a billion strategies out there made by idiots that don't know how markets work. Therefore, what they do is they say, we're going to target 10 pips and we're going to go for a 5 pip stop loss. Yeah, that'll work absolutely fine when the market is like this, because normal ranges will be fine. Yeah, this does 48 pips a day. So if you're targeting roughly 20% of the average daily range as a target, you might be all right. You could probably get in or out twice a day and make some money. When the market is up here, yeah, doing these sorts of ranges, that strategy will not work. Yeah, if the market changes its condition from here to here and spends an entire year doing that, that strategy won't work for an entire year until it returns down to here. But even then, it was more wavy than it was back there. So the market regime, market condition, is what makes a strategy successful or failure, dependent on how it's manufactured. If it uses pips, it won't work. If it uses ATR or ADR, it will probably survive. But again, if you are trading a trending strategy and the market goes into a range, it will fail. If you're trading a mean reversion strategy and the market goes into a trend, it will be less successful, but probably still work. If you're trading a breakout strategy and the market goes into a range, it will fail. Yeah, which is why we are predominantly mean reversion traders, because the market spends 80% of its time either in a range or trending hard. Mean reversion works in both market conditions. Breakouts will only work when the market is breaking out into a trend. It doesn't work in ranges. Yeah. So the answer is complicated, but yes, they will fail. And it's not because banks and institutions find out about them, and they know them, and they hunt everybody's stops. They don't know you exist. Banks and institutions have no idea I exist. They have no idea about retail money. I know people in banks. They don't even know what retail trading is. It doesn't come into their equation. When you're dumping 500 million in orders into the Euro Swiss today, whether 1,000 people get stopped out when you press the button to put 25 grand of that in, you couldn't give a monkeys. They don't know. They don't care. It's irrelevant. Market makers hunting our stops doesn't happen, because market makers make markets with their money. They don't need our money. If I stick 10 grand's worth of trades through the Euro Swiss today, the market makers will suck that up within a millisecond, because they're putting 100 million through the thing. $7 trillion a day. Yeah. Just all these theories about, oh no, you don't share your strategy because the banks will find out about it. Idiots. But I was one of those once. So I shouldn't say idiot, should I? Because I was an idiot once. But yeah, they do fail, which is why you have to constantly adapt. Yeah, and you have to identify what the markets are doing, which is exactly what I've just been talking about. Right now, when the market does something like this, I'm not interested. This is how you make money in gold. This is how you make a lot of money in gold. This will fail. This will start to make money again. Yeah. This, no idea. So I'm waiting for that. There's no point in trying to trade any gold strategy here. Yeah. I've done a back test and I've developed a strategy for gold, which from 2023, it's 2023. To 2024, generated a profit, a very small profit. From 2024 to date, quadrupled the account. Why? Because I knew it was trending and I picked a long only strategy. Yeah. If now gold does this for the next year, the strategy that I used there will be absolute rubbish. It will blow the account over and over and over again because it doesn't suit a trending market. Yeah. In a long only condition. It will suit a trending market in a short only condition, but I don't know if the market's going to do that or that next year. So you've got to have a strategy which is diversified, and you've got to have multiple strategies. You need a mean reversion strategy, you need a breakout strategy, and you need a trend strategy. If you have all three of those running on one symbol, one of them is going to work. As long as they have a strike rate above 33% and a 2-to-1 risk-reward ratio, you cannot fail to generate alpha, generate profit. It's all maths. All trading is maths. But people look at systems and strategies and they hunt for the holy grail their entire life. I've done this for 20 years. It doesn't exist. The market goes up, the market goes down, and it moves through time. It has a 50% probability of doing one of those two things. If you press the buy button, your odds are that. They will never change. Yeah. Whether you make money or not depends on whether it moves up by that or down by that. That will make you money. Yeah. If you increase your strike rate to 70% and you get out at a 1-to-1, you will also make money. It's maths. If you want to find out how to do the maths, it's all on the website here. Yeah. Produce an upward equity curve with a 50% strike rate, you need to generate a 1.25 risk-reward ratio. If you use a 1.1, you won't make money. But if you increase your strike rate up to 56%, you will make money. Thing is, you cannot control that. The market controls that because the strategy that you trade will either work or not work depending on market regime. And you can't control market regime. You can control that. And you can control that. And that. So this is a variable out of your control. So let's say 1 month you do that, 1 month you do that, 1 month you do that, 1 month you do that. What you need to do is pick the lowest one you've ever had and work out what risk-reward ratio you need to generate alpha. That's a strategy. Yeah. Flip a coin with that, you'll make money. Spend the next 5 years hunting the internet for an indicator that is profitable. You won't make money because indicators don't make money. That makes money. EAs don't make money. EAs programmed to use that effectively make money. Yeah. No indicator on the planet will ever tell you what price is going to do next. RSI is extended to the upside. It's definitely going to come down. No, it's not. But it has every other time. This time it didn't. What happened to your account? Yeah. Nothing wrong with the strategy. RSI is a great, I live by RSI. My life. ADR, RSI, it's all I do. Yeah. Because it works 90% of the time. When it doesn't work, I have a plan to make sure that I don't lose all my money. It's literally trading, isn't it? The maths has got to be there. So yeah, strategies will die, but they will come back to life as well. So you go and get some of Larry Williams' strategies, or any of the strategies like the turtle trader strategies, the turtle strategy, very well-known strategies. Yeah, they still work today, but they don't work all the time because they only work when the market conditions are right for the strategy. The difference we have now is automated trading has meant that things like this happen, which are just not normal. So you're going to get outliers or black swan events where you just cannot use any strategy. If you happen to press the short button on that 4-hour candle that day, well done. But you are not a skillful trader. you just found a 3-bar reversal pattern, which works probably about 45, 50% of the time at highs. You just got a bloody lucky one. Yeah. Half for trading's luck as well. Just how it is. There is no, there's no holy grail. Stop looking. Learn how to trade. Everything you need to learn how to trade is in here. If you understand all of this, probabilities, and how markets work, you'll understand that there is no indicator you can buy that will tell you what price is going to do next. It will tell you what price has done. The market reversal alerts indicator, it's my indicator. It's a great indicator. It's brilliant. It indicates when market structure has shifted. You can see it on the chart though. Yeah. So this signals after the event. Every indicator lags price. This signals after price has gone up. Doesn't help you get in that, does it? But it helps you identify when that might be coming. Yeah. So all they do is they tell you what's happened and they ping you an alert and say, do something. Every time you press the button though, the odds are still the same. Yeah. You can't increase strike rate with indicators. That's what everybody's looking for. Everyone's trying to find the indicator that increases the strike rate of their strategy. You can't, because it's always 50%. That's the bit people just miss. I missed it for about 4 or 5 years. Maths. Morning, Blue Trader from Pontevedra. From the land of rain. Oh, good. Experiencing rainy days all week for 4 weeks, similar to the market. Yeah, I know. It's bad, isn't it? My wife just told me this morning we got rain coming for the next 4 days. Brilliant. Love rain. So can we assume that when gold break the recent high, we see more likely the test of the all-time high, and then we break the and then when we break the recent lows, it's more likely to start a big correction? Yeah. So if you right, so there's your 50% retracement on 60-day retracement on the DAX. It's not going anywhere today, is it? It's going to be one of those days. So lower low, lower high going in. Nice wicks, upside rejection, but just putting an additional order in there. If this works, I'm just going to add. And then when we break that low, I'll pull those stops down to reduce risk. What was I talking about? All-time highs, gold. Yeah, so if you look at gold, where you are here. So if we break that high, this propulsion gap, you're going to test that high. So, you know, that is a 1 to 0.96 risk reward ratio. So you can't trade that. You can do, but I mean, it's not going to do much, is it? So, yeah, it's just a case of trying to formulate a plan around it at the minute. But, you know, if it breaks this high here, the chances of it getting up there with this magnitude of movement, I think, is low. We're going to return back to this, right? So if you look at how long that took, and this is a big move. This looks small now compared to what we got here, but look at it. It's normal, yeah? This is normal price action. That's what it normally does. Think about how long that's going to take. This is a month, right? 1, 2, 3, 4 might be there by the middle of the year. So that is achievable if we return to normal ADRs within about 3 to 4 months. If it breaks the lows, and the low is all the way down there, yeah, you are going to find it hard to sell that because you're selling directly into support, which actually has already been broken and retested. So that area there and this area here, these propulsion gaps basically are your downside targets. So if we go short, I think we could get back down to there because this is going to correct. Yeah, this looks like a massive correction at the moment. Scale out. Look at what we've really got to correct. Break of that high from here. 50, 61.8 retracement, that propulsion. That's where you got to come. If it's going bear. Right? The other thing that you've got to bear in mind as well at the moment is if they're right about the SaaS apocalypse, as they're calling it, the software as a service apocalypse, which is coming because AI is going to basically destroy all the software industry. If that happens, the Nasdaq is going to collapse. If you're pulling your money out of risky assets, stocks, where are you going to put it? Swiss franc, Japanese yen, and gold. Yeah. So if stock indexes go bear, this potentially is going to go bull. So if I was an investor in a bank right now, I would just be pulling my hair out because it's almost impossible to predict stopped out on the long, on the short. Market's ranged today. So sell those highs maybe, buy those lows. We ain't going anywhere. So yeah, you can't tell where anything's going at the moment. We've just had all-time highs, fastest movement in history in gold. We've got AI accelerating at the fastest rate possible, potentially impacting the unemployment markets this year to extents that we've never seen in history. We've got advancements in that are going to destroy high net worth businesses overnight. We've got industry sectors that are going to vanish, which means it will have not just an effect on one index, it will have effect on multiple indices. And all this is going to be happening like that, like lightning. So you pick a direction. Like I said, this is the most important thing. Whether that number is a positive there is more important than the direction, because the direction is irrelevant. The direction isn't something you can control. Make sure you make more if it works than if you lose. Yeah. I'm down 2 trades this morning. Yeah. So if I go long now with a 2R and I press that button now, I lose nothing today. But the reason I don't become a losing trader today is because I've kept that at a positive. That's the most important thing. That's the only thing. Gold's a mystery at the minute. No one can tell you what's going on, and if they say they can, they don't, they're lying, basically. That, go back in history as long as you want. That has never happened. Never. We've had things that have been big and people have gone, holy crap, did you see that? What happened? What's this, right? Go back and look at a stock index. We'll do it now, look, right. I'm not sure I can actually do this. That spike there in 2010, go and look at a stock index. Haven't got it. That was the market crash, 2010. What happened to gold? Huge spike to the upside. Biggest spike we've had in history of gold. Yeah. What are we predicting now? What do you think is going to happen to gold? How is it going to find enough money to drive when it's been doing this for a year? How is it going to get? How? It's just unfathomable, the numbers that it's going to need to produce a bull move in a bearish stock market when we're up at this level is just Can't get your head around it. If in doubt, stay out. But look at that rejection on the weekly. Look at that. Yeah. Exhaustion. But what have we just done? We just bought back 50% of this week. Looks like it, doesn't it? But you're mental trying to buy it at the minute. I don't know. I'm just, I'm not in. I'm out. This thing hurt me again. And every time I get into it, it hurts me. If I get in this long, it will go short. If I get in this short, it will go long. I just cannot trade this thing. It doesn't work for me. So you make up your own mind. Have you any thoughts? Done any work on VWAP? No, don't do that because it's futures. It does appear to be mean reversion. Yeah, it is. It's a moving average. It's your volume weighted average price. Average price. We have moving averages price, moving average prices. That's it. That's all it is. VWAP is a moving average, but it's a volume weighted moving average. So it's just the average volume for that symbol. So yeah, it's a Bollinger Band. Yeah, look at what a Bollinger Band is, right? Go do yourself a favor, right? Go and find VWAP Bollingers. All you're trading with there with a VWAP is a Bollinger Band. This is the hunt for the Holy Grail I was talking about earlier. It's not going to help you. Imagine for 1 minute that this is a VWAP. This is a standard deviation. That's it. So yes, when it gets far away from the volume weighted average price, it will want to revert to the mean. When we get far away from a moving average, we want to revert to the mean. When we get far away, we want to revert. When we get far away, we want to revert. When we get far away, we want to revert. When we get far... VWAP is just another line on your chart, which is telling you what the average volume weighted price is. This is the average price over time. It's the same thing. A Bollinger Band is a moving average with a standard deviation painted on it based on volatility. All the same stuff. Literally, it is all the same stuff. You've done the course, haven't you? Yeah? You should know all this. Same. It's all the same. You stick 1,000 indicators on your chart, they're only going to tell you one thing: what price has done. Which is good. You need to know what price has done, obviously. All these are signals, yeah? So a VWAP, basically, if you use a VWAP standard deviation indicator, you can paint the standard deviations on your chart. Same way as if you put multiple Bollingers. So if you go, a lot of people would do this. Put a Bollinger on there, just to use a 20. VWAP is VWAP. You don't get to control that. It is the volume weighted average price. There is only one in the world. Yeah, you can't change that. But there's a 2 standard deviation. There's a 3 standard deviation. And there is a 4 standard deviation. Actually, I know I use a 1 standard deviation instead. Yeah. So this basically gives you a deviation channel, which tells you how extended something is away from its average price. Yeah. So the further away you get, the further band you touch, the more likely the mean reversion becomes. And then you will revert back to the middle line, which is your mean, your average. Yeah. So this is basically on average what everyone was trading at for the last day. Yeah. So when you return there, anybody that is short will want to average in, moving average in to their position. I say everyone, banks. So therefore, they become self-fulfilling prophecies because they are telling you what the average price of the bank and institutional traders is. This is why we use them, because they tell us a story about what the banks and institutions are doing. When the banks and institutions are too far away from the average price, they won't want to sell anymore because they know they can achieve a better price. So it doesn't move any further because they need to take profit on the leg they've just created and then add in at a better price, which is more of an average of what they've got their overall position on at. The volume weighted average price works in futures because futures markets work on being able to inject volume into the market. So therefore, it makes sense to use a volume weighted average price because that helps you to identify where the vast majority of today's trades have been activated, which is kind of what you get with a footprint chart. Yeah. So if you see a footprint chart that looks like that, yeah, and the VWAP is sitting here, you can be pretty accurate with high probability that if price trades back into that volume spike at the average price, and we've moved down today, the market will sell it again. But the problem with every moving average mean reversion strategy is if you are miles away from that VWAP moving average, whatever it is, and you are trying to mean revert it, you don't know when the market is going to be ready to mean revert it. So if you apply bands, standard deviations from VWAP onto your chart or standard deviations from Bollinger's onto your chart, that will give you the levels that you should take, and it stops you over trading. Yeah. So if you take a trade because we've hit that and rejected it, yeah, get in with a stop under the second standard deviation or the third standard deviation in this case, you'll usually be safe. If you get to the third standard deviation, look for the fourth standard deviation for your stop and then trade it back to the mean. Yeah. It stops you trying to catch, like we always do it. Yeah. Oh, look, there's bullish movement, stopped out. Oh, look, there's bullish movement, stopped out. Oh, look, there's bullish movement, stopped out. Oh, look, there's bullish movement. Oh, looks like this one's going to work. I'll get in. That's a 3R. So what have you done? -1, -1, -1, +3. What are you? Break even. Yeah, trying to catch a falling knife. That's what the danger is with VWAP, people trying to trade back to it. What you should be doing is waiting for price to return to VWAP, trading with VWAP, because that is the way that people are going today. It's not going to give you very many opportunities, and some days it won't get anywhere near it, which causes frustration, which causes over trading, which causes you to go wrong. But if you add deviations, standard deviations onto that indicator, it will give you where to trade. And if you can tie these levels up with previous footprints, there's, like I can tell you that there is a high volume spike on a footprint chart there. There is a high volume. I'll draw you the footprint of this day. Yeah. So this day starts there and ends there. Yeah. Price moved up. We got a volume spike. It moved down. We got a massive volume spike. And then it did that. Okay. So that is today's point of control. That is a secondary spike. If one of those levels happens to coincide with a standard deviation from today's average price, I would buy that. Yeah, and this is why you combine indicators together. It's a classic futures strategy, and it's a really good one. But it won't give you many opportunities. And this is the problem people have, is you want to be in the market. If you have to wait 6 hours for it to get back to that VWAP, and then you press the sell button and it blows through VWAP, drives you nuts. But that's what you need to do if you want to make money. You've got to be patient. Wait for the probability to play out. Look at this one. It's a great example here. Look. Let me just move the... let's make that one red. So that's yours. That is your moving average in the middle there. Actually, I'll tell you what I'll do. Let's go no standard deviations. So look at how this stalls when it gets there. Stalls. Yeah. Always pushes back from it. Yeah. And this is basically them propulsion gap, pull back into propulsion. At a lower time frame on a 5-minute chart, there's a propulsion gap. We pull back into it, we resell it. We create a propulsion gap. We pull back into it, we resell it. We create a propulsion gap. We pull back into it, we resell it. And that's what a trend is, isn't it? Market structure. Yeah. Standard deviations tell you when those pullbacks are going to come. Look for propulsion gaps to sell once we've achieved those. There's millions of strategies you can do with indicators. Yeah. But people will use them. They won't work. And then they move on and try and find the next one because one of them's got to work. They all work. They all tell you what the market's done, therefore have a probability of projecting into the future where we may go next. But there's not one that's going to tell you with any accuracy what's going to happen next in the market, because the next candlestick that comes after this one is completely random based on volume of movement by 10 institutional banks who control $7 trillion a day. They don't know which way it's going. And this is what we spend our life doing, is hunting for an indicator that can predict the future. You can't. It's not possible. Just can't do it. But VWAP's a great indicator. New Zealand yen has just hit ADR. So what we've got now, right now, is price extended beyond, or price has achieved its average daily range, the amount of movement it does on average every day. Yeah. And we are in a bearish market structure. So what do you think you should be looking at now? Sell. Yeah. Is that going to happen? No idea. But we know that when we achieve our average daily range, there is a 42% chance or that we will go beyond it. When we get to 125% of it, there's a 23% chance we'll go beyond it. So there's actually a 77% chance we won't. That is a high probability setup. It could achieve 225 ADR today. But all indicators are going to tell you is what's just happened, and therefore where there may be an edge. So you just basically wrap risk and reward around a trade idea based on something that happens over and over again. That's all trading is. It's maths. You apply positive maths to probabilities. Yeah. We haven't got VWAP in this, so I can't really show you any more information about it. But yeah, it's a great indicator. But, you know, like there's a 35% chance of a breakout happening today. I've picked the day where it hasn't happened. I can't do anything about that, but what I can do is control risk. Now you can sell this. So a lot of people now, because of what's happened so far today, will be looking for something along that line there. Yeah. So this propulsion move here, which is your end of day propulsion sell off yesterday, has been rebought. We've resold yesterday's open in New York. Actually, that was news, wasn't it? Yeah, so that was news. Yeah, we've resold that 5 times. So people are going to sell this now. I've got a 1 to 5R if we stay in a range today. That, if that trade works, gives me a positive 3R on the day right now. That is a great trade. But it's not a great trade because I know what the market's going to do next. It's a great trade because of a positive R. And I can see the market is range bound right now. But does it mean that the market is going to stay range bound? Because I can see it is range bound now, it doesn't mean it's not going to go parabolic and come and test that high. There's a 91% probability that it will test that today. There's also a 91% probability it will test that today. What does that give me? A 50-50 shot. Everything is a 50-50 shot. That's a good short, isn't it, right now? Mathematically speaking, anyway. If they were to pull $1 trillion out of the stock market and 500 billion out of pedo coin, maybe gold could hit 7K quickly. Possibly. Don't know. The thing is, banks and institutions aren't invested in crypto because, I mean, Bitcoin's collapsing, isn't it, at the moment? Again, it's all interlinked. Yeah, we got a problem with Bitcoin, haven't we? It's a huge collapse year to date. Let's look at the 1 year chart. Yeah, we've had this before. Yeah, bang, bang, bang. What happened next? Bang, nothing. So what's going to happen now? One of them, innit, probably. That resistance blown through it. We got support coming up. So if I was going to buy crypto, I'd be waiting a little bit longer. But you know, where is this money going? This isn't going into gold. You know, the gold move has been created by BRICS. It's weird, isn't it? How they name themselves BRICS and gold comes in bricks. But yeah, this has been created by BRICS, this move here. So it's nothing to do with this move in Bitcoin has nothing to do with gold. But Bitcoin is now basically linked to stock indices. So it has in the past moved before index crashes and pumped before index pumps. So everything I've been saying this morning about the AI revolution, software companies going pop, all this sort of stuff that the market is worried about at the minute, the bubble bursting. When we get bubbles that burst, the 2010 one, for example, gold always benefits. Yeah. So do you want to be buying gold or selling gold? I would have to say you've got to be buying it at the minute, but that's in the past. Now we've got a new world order with gold, haven't we? We've got two markets for gold, not one. We've never had that before. So what's going to happen now to gold US dollar? We don't know. Nothing you can do to predict the future at the minute. It's just an impossible situation. We have no precursors. Everything we do in trading is based on historical patterns, historical data, historical probabilities. We've got no precedent for any of this. Euro New Zealand ADR, which means that Euro odd will be on the move as well. So ADR, Euro New Zealand. So we got a strong Australia. That's a weak euro, isn't it? Weak Swiss franc. No, that's a strong New Zealand dollar and a strong Australian dollar. And more strength coming through the Aussie. Again, gold, I would imagine, is pushing up today. Not too much, but this is what's linked, isn't it? Australian dollar, New Zealand dollar, Canadian dollar, gold. It's all commodities. Commodities up. Makes you want to just get out and pull the plug on these Australian. If you're an Australian trade short at the minute, I get the feeling we might have had it. Time to jump ship. I'll look at this in the member stream this afternoon as well. I just get the feeling these Australian markets are really taking over at the minute. Well, we know they are, but just get the feeling they're going to continue, which is going to bode well for the yen either, which means that intervention's coming. So much to think about, isn't there, at the minute? This everything at the moment is just nuts. Don't you using RSI, bro? Yes, bro, I do, bro. Yeah, I do use RSI. Okay, ORB has re-triggered on the 30-minute long. So we are long. Aussie yen, ADR, strengthen the Australian dollar. Okay, so ADR is long again. ADR. ORB is long again. So you've got an inside bar just formed there. Indecision. So a break of 18's low is a potential short if we're staying range bound. Stop above wherever we put a new high in, if we're going to put a new high in. That's a decent short today. I'd rather they came up and tested this high to see if we can get beyond that. That would be, for me, I think a nicer range-bound trade, something like that. After we've tested that high and we've got some bearish price action, but we'll see where we go. So yeah, if they pull 1 trillion out of the stock market and $500 million out of crypto, would you put it all in gold though? That's the thing. So the thing at the moment is you probably wouldn't put it in, if you're going to put it in gold, whose gold are you going to buy? That's the question. Yeah, you're buying BRICS gold or you're buying other gold that's priced in dollars, Australian, or US or anywhere else. That's the question, isn't it? Because the gold price is just going, through the roof. But how do you buy it and whose do you buy? That's the question now. And I think that's what the markets are, why the markets are so mental, because they don't actually know what to do. Do you want to deal with China or not? And don't forget, the vast majority of this money that goes through is US banks. Obviously, they're going to be buying US, aren't they? So, I don't know. Very, very difficult to figure out what the hell's going on anywhere at the minute. So just looking for a rejection of that high. So we're just rejecting this, or potentially rejecting this area at the minute. If you're long on ORB, if this breaks now, you've got a clear run up into here and into that accumulation. If we break long now, we're going to test previous day's high, I reckon. So we've tried to go short. It's rejected out of propulsion from yesterday. We're now trying to go long. So if you get the ORB here, it may go straight there. If the ORB breaks and pulls back, you can buy it there. Does look like it's going long, doesn't it? So it's looking for some kind of pullback continuation, potentially. However, this could still be range. Very hard day to trade today. One of them days. Based on what you said earlier, the break in the DAX should now test the prior high. Gone short. Pulled back up. And has now looks like this. Okay. Yesterday's candle, the low of it was down here somewhere. The high of it was up here somewhere. Yeah. So we've rejected, haven't managed to test that low from yesterday, pushing back up. So there's a 91% probability that we will do that or that. And as we've tried to do that and we haven't been able to, the most logical move is long. There. So if you want to get in on this now, what your job is not just to press the button, New Zealand Swiss ADR, is to formulate a plan that takes that high, giving you a positive risk reward ratio. So you can't do that because that gives you a 0.5R. If you keep doing that and you're wrong any less than 60, 70% of the time, you're going to lose money. So you've got to basically formulate a positive R. So if you put your stop there behind that propulsion move, which was here, which is breaking that sell move, yeah, you should be safe. But that only gives you a 1-to-1 risk reward ratio. So the best thing to do is to wait for price. Now we've broken that little high there, to pull back at some point to some degree, and then try and get a long in, but use that as your backstop and trade up to there. But do not forget the house edge. There is a 9% probability that we will not get there, and we will not get there, and we will put in an inside bar. There is still a 10% chance, a 1 in 10, that we don't get there or there. It's all probabilities, it's all maths. Yeah. So if there is a 10% probability of losing and a 91% probability of winning, you could have maybe 3 attempts at doing that today, and you'll probably get one of them right. And as long as you've got a 3R on it, you'll come out as a break even. If you get it right first time, you stop trading. Done it. Your job is to make money every day, isn't it? You could take that and assume that this inside bar break here is going to act as a support. Very aggressive. But that gives you a 2R. I'd want to see this pull back though. Need some, this is the problem. This is why ORB works nicely, because I'm long on this with an ORB. If this just goes parabolic now and does the 90% probability, just goes parabolic, happy days. If it goes like that, the ORB will stop out and then it will hit target without me. But what I will be able to do is, if it does that, is I will be able to take a long here with a tiny little stop loss like that and achieve a 1 to 4.8 risk reward ratio. That's what I would rather do. I'd rather sit patiently and hope we get here with a probability of making a 5R today. Much nicer trade. In fact, if you want to, you can go and make a cup of tea, Aussie Swiss ADR, and place it. There you go. Pending order placed, stop loss in place, target hit, off we go for the day. That'll either work or it won't. If it doesn't work, I lose 1R. If it does work, I make 5. Maths. I can be wrong 5 times doing that and still not lose money. 20% strike rate. Yeah, so 1 to 5 risk reward ratio. Well, 1 to 4.8. Let's call it 1 to 4.75. Yeah. I can be wrong 75% of the time, still make money. I can be wrong pretty much 80% of the time, still make money. That's 80%. That will give me pretty much a break even. Yeah. Take 5 trades, be wrong on 4 of them, get 1 of them. If you flip a coin 5 times and call heads, what's the probabilities of you getting it right? So true, watching the price can drive you nuts. Yep. This is why everyone fails, because you just get driven nuts. When we can teach AI to trade for us, and I'm working with AI at the moment I am trying to train I've got my own agent and I'm trying to train him to trade. And basically I'm teaching him what I've done in my life, and I'm teaching him what I've done to train my brain to read price action. He can do it. Let me tell you how fast he can do it. So I set him off on a mission at 7:52 this morning. He came back at 8:04, having watched, not back tested, watched 15,000 candlesticks, right? So imagine yourself in the back tester We'll do it now, right? Imagine yourself in the back tester trying to trade this when it loads. Oh, it's collecting data. Right? Imagine yourself in the back tester trying to trade this. Oh, what a stupid EA is this? Something that trades at like, no, let's do it on that. Right. Oh, that's too quick. I'm not going to be able to do this, am I? Right, that, yeah? We just went, that was a year, right? Imagine trying to do that. He can do that because he can process a candlestick, evaluate it, look up his journal and go, last time it did this, it did that. The probabilities are this. So what I'll do is I'll wait. Next candle. Not seen this before. I'll log that down and see what happens next. Next candle. Yeah. I've seen this before. We've got a 33% chance of a long getting 3R. I'll go long. Stopped out. Log it. Maybe won't try that again. Yeah. He can do that, right? 15,000 times with that. And it's not back testing, learning. You can do it 15,000 times in literally 12 minutes. Imagine if you could do that, right? So I'm trying to train a model by saying you are not to backtest. I've given it data and I've said you have to go candle by candle, and every time you start, you can look at your journal, you can look at your previous practice session, but you are not to remember any candlestick that has ever been used before. And I want you to trade it. And I want you to keep trading it and log your process, log your progress as well, and show me how you are improving. Yeah, and that's what it's doing. It's running these cycles constantly. Yeah, using up a shed load of Claude credits. But that's basically what I'm training it to do. And that's basically all I've done all my life is do that. Put yourself in the back tester. And all he's doing, literally, is he's going, this has happened X times in the past. I've seen it. And X times it did that. 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 The probability of it doing one of those that makes money with a stop there and a TP there is X. Is it a tradable thing? Yes, no. If no, how can I adjust this to make it better? I could add more size if the price moves up and reduce the risk to the same. What happened the last time we did that? And it's literally logging that over and 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 over again. Yeah, it's using 15-minute charts at the minute. But it's building up a massive knowledge pool itself of how to trade. Yeah. Maths, all it's doing is it's using mathematics, basically, and previous price action to understand probabilities. Yeah. That trade there is a high probability because we've seen this happen over and over again. Yeah. What the market does, it moves to propulsion and they buy propulsion. We know there's a high probability of that happening. We know there's a high probability of that happening. So that trade there, if it only works once every 5 times, makes me nothing. If it works every 3 times to 4 times, profitable trader. That's it. All you got to do. But the problem is you will see that and you'll go, I don't like a long, I'm going short. It's going long. Stopped out. 2 stop outs because you're not following your plan. Your plan is that we're going to hit that level. What you're trying to do is get there now. It's not going to do that. You've got to formulate a plan. Formulate a risk-reward ratio around the movement you're expecting to happen. It's the only way you'll ever make money. RSI is the same. Yeah. RSI is extended to the upside. Yeah. There is a probability of that now doing that. Therefore, I need a idea where we're going to go if it works, and I need enough room to create a positive R with a stop loss to be able to take that trade. If it did this and RSI got extended there and that's the trade entry, and that is the risk reward, that's no good. I can target that, yeah, which is a 61.8 retracement on the previous leg, or a 50% retracement on the previous leg. So it's all about making sure that the room is available to you to be able to trade. If we're going to stay range bound today, that is the trade that you're going to take, yeah. So if this candle goes inside bar now, there is a sell opportunity for you with a stop above that high there and a risk reward ratio of 1 to 2.66. Take it. Get it right 1 in 3 times, not a problem. If you get it right 2 in 3 times, happy days. But you can't do that because there's not enough room. Unless you're going to get it right more than 50% of the time, which you won't because your probability is 50%. Maths. That's all it is. All you got to do. Indicators aren't going to help you. Obviously, they will help you because it helps you to ping alerts at you. That's it. Signal indicators tell you to get in now. Condition indicators tell you to have a look at maybe getting in sometime soon. Yeah. So all they're ever going to do is tell you what's happened and tell you that there's an alert. Your decision-making process has got to be based on where price is going next. The way you make money is by formulating a plan as to what the next move is. And you have a 50-50 chance. It will do it or it won't. That's all you got, isn't it? 10% of the time risk versus my other strategies, which are no better than 50-50. Yeah, all strategies are going to be 50-50. That's at the end of the day. If you have if you could achieve a 50-50 strike rate, a 50% strike rate, that is more than enough to make money trading. Yeah. Yeah. If you just flip a coin, you can't lose. Yeah. You literally can't do it. If you just pick a random time every day and flip a coin, if its head go long, if its tails go short with a 1-to-1 risk reward ratio, in 12 months time, you won't have lost any money. You won't have made any money, but you won't have lost any money. You'll be roughly break even because it doesn't matter the probabilities of how many times you get a head and how many times you get a tail. You will get 50 of each eventually. It will even itself out. Yeah. But if you can find an edge, RSI, and take a 1-to-1 risk reward ratio using an RSI indicator that gets extended beyond 90, that will happen. You don't need to change this. What you need to change is your strike rate. Or you keep your strike rate and you go a little bit further with your strike rate. That's it. That's all you got to do. If you just go to there. But no one can do this because everybody wants to be right. It's not about being right. It's about understanding mathematics and understanding probabilities. Do you think the person that traded this strategy, which is profitable, yeah, carried on trading after that? No, they dumped it. And they went off looking for the next indicator, the next strategy, the next guru, the next YouTube video, because it lost 7 trades in a row. Yeah. It only takes 1 trade a day. So for an entire week, he sat there, wasted his entire time losing money. He went off and found another guru with gold teeth somewhere on the YouTube, who's 16 years old and is a professional trader. Yeah, but that's what they do. That's what you do, isn't it? Yeah. But that's normal. Absolutely normal. It's how you make money. Because the probabilities create a mathematical edge. This is why the house always wins in a casino. You got red, you got black, you got green. Yeah. 98% of the time, one of these bad boys will come up. But 2% of the time, you will clear everything off the table. Everything. So you pay these guys 2-to-1. When that lands, you get 200-to-1. The edge. It's maths. Yeah. Casinos can sit there, right, for 3 days and not have a green come up. Yeah. The green will come up twice over the next 2 days and completely wipe out all the losses they've taken, giving everybody the reds and blacks. Maths. That is their risk-reward ratio. Something like that. Yeah. House edge. Yeah. If you only win 10% of the time, but you win 10 times as much, you're going to win, aren't you? Imagine if green comes up 5 times this week instead. Woohoo! Bonus for the floor manager. Nothing to do with anything but literally mathematical probabilities. There's a short. So you are either now a bear doing that, or you're a bull like me waiting for that. Aussie CAD, Australian dollars on a mission. Lots of ADRs on the Australians this morning. So Aussie CAD, Aussie Swiss, Aussie Yen, in fact, all of them. Aussie New Zealand won't, because what happens when the Australian dollar powers up? The New Zealand dollar powers up. What's a bull against a bull? A range. Nothing happens. Aussie US on its way. New Zealand dollar Swiss, so the New Zealand dollar is moving as well. So it's the Australasian markets, commodities markets. So you would expect gold to be rallying. It's not, look. This is Australian dollar, New Zealand dollar. It's not commodities based, this move. Unless oil is moving. Wow, big spike on that. As of now, the US 500 NASDAQ will gap above the open. As of now, yeah. I can't get stats because market's not open yet. If it drops and fills the gap but begins to bounce, the prior high comes into view. The risk reward using the prior low is over 3-1. So that is yesterday's. That's your yesterday's high. This is the previous session low and yesterday's low. So right now we're inside bar. Yeah. Actually, no, we've gapped down and pushed back up again. What was the question? NASDAQ will gap above the open right now. Yeah. Right. So there's what? The market hasn't opened yet. So you can't gap above the open because it's not open. You can gap above the close. Yeah. So yesterday's close is there on the NASDAQ. Market close. So right now we are at the previous close. Yeah, prior close. Don't understand what you're saying. I've lost track of what you're trying to say. Depending where this opens today, right? So let's say, for example, we trade up to here. Yeah. If the market opens there above the prior close, yeah, within the session, there is a high probability of doing the gap. But we don't know where it's going to open yet. There's no point in speculating on the NASDAQ or the S&P 500 or any of this. Wait until it gets there. This could do ADR. This could be up at the previous session high by the, or it could be collapsed. But I would be, if this was up here, I would be looking for shorts at the moment. I wouldn't be looking for longs on any US indices. I'm not really looking for longs on any indices at all. There's an argument for should really be looking for shorts on the DAX because the DAX is a stock index and it's fed by tech stocks as well. The DAX is predominantly motor focused, but that to me is probably the better trade today. And if you're getting short here and you see it bounce here, close the short and assume that that is that play. But the stock indices at the moment, DAX included, are bearish, aren't they? So you want to have a bearish bias, ideally, because that's what the markets are doing. But equally, a lot of people are looking at yesterday and going, well, we bounced off yesterday, we bounced off the weekly lows. So we're in a range. And they'll be trying to trade it up to there. You see how this works? This is why we have the bulls and the bears. And this is why everything is a 50% probability. Every single chart you look at on every single time frame will tell different people different things. Right now, there are a load of people looking at this chart, buying it, because it's a double bottom bounce rejection. It's a triple bottom range. Other people will be looking at this going, we're in a nice little bear move here. I'm going to just be selling this today. Yeah. Banks will be doing the same thing. If there's 200 million there and 100 million there, we're going up today. If they had another naught on the end, we're coming down fast. But what's happened here and what's happened here have got nothing to do with the rest of today's volume from banks and institutions. That will decide whether we go down or up. 50-50 probability. That's all you ever have. This will either go down or up. I can guarantee with 100% certainty it will go down or up in the next candle. I can't tell you which. I can tell you with a 91% probability it will get there or there. But there's a 9% probability it won't. There is an 8% probability that it will do that and then finish here, outside bar. There's an 8% probability of that happening as well. Unlikely today because we're not really doing anything. But yeah, Trump comes out and says, I've just heard that China are going to shut down their AI development and let the US AI companies take over. Oh, sorry, it's the other way around. We're going to shut it all down in the US. Oh, no, sorry, it's fake news. That happens 8% of the time. But what drives it is irrelevant, isn't it? You have no control over what drives it, and it doesn't matter what drives it. The fact is, as long as there's something driving it, you can make money. Shorts on. So I'm going to short this down to there. I'm going to watch that propulsion gap if it gets there. If it gets there and it looks like it's starting to reject, I can bring that down to break even and there's absolutely no risk to me. If that fails, stopped out, -3 on the day. So I need a 3R to get myself back to break even. If it does this today, I'm going to stop out on that. And I'm going to get a 4R on that, which is going to put me up 1R on the day. We got. It's all theatre. It is all theatre, especially with Trump involved. Mr. Pump and Dump himself, Mr. Pump and Dump Trump. Add in the 3 down days, and I'm bullish the US indices. I'm in long on a break above the prior cash market low with a stop at the futures overnight low for 1% risk. As long as you got a bigger reward than your risk, fine. If you haven't, it's not going to work. Long term. It might do. Don't know. Depends what your strike rate is, doesn't it? Okay, so we've put a lower low, lower high in. So we're carrying on bear move, but this looks like a bear flag to me. Bull flag. It's the fact that we are making ever such tiny bearish progress at the moment. Looks like it's struggling. Yeah, you look at the advancement on the bulls. Yeah, so high, and look at the lows that we're managing to put in. How small the lows are compared to how high the highs are. Yeah, this looks like potentially a bear flag. And the bear flag could go to moving averages and bounce. It could come back down into propulsion. They'll buy that. But it doesn't look to me massively bearish. But again, the next candle will go like that. Then it will. Who knows? Right, there we go. Done. There's nothing much happening apart from trying to figure out what the DAX is doing today. So Aussie dollar obviously is the main mover at the minute. ADRs on all of those at the moment. So there's opportunities for mean reversions on these Australians. Obviously, a lot of these Aussies, we are in a bear market, a bear run for the last 3 days on the Australian dollar. So, you know, Aussie dollar Swiss, for example, we want to watch this area, which we resold that propulsion move. We didn't manage to break that low. We really, really struggled to break that low, and then we resold it. So this is a pretty good sell. It's a 50% retracement on the 3-day leg. All these Aussies basically that are at their ADRs, potentials for taking more shorts. We are potentially forming ranges though. So could go either way, couldn't it? Again, exactly the same as I just said. I'm looking at this as bearish correction. Reversal alert, retest, market structure, lower lows, lower highs. A lot of other people are looking at this as we are buying this support. They'll be looking to trade it up into here or potentially to break out into new highs. Yeah, we're both seeing the same chart. Both have a different opinion. One of those opinions is going to be correct. There's no one on the planet right now that can tell you which one. That's trading. As long as you've got a formula for making money out of market movement, it doesn't matter which way the market goes. It doesn't matter how much you're right. What matters is you have a formula to extract money from market movement. As long as markets move, that's all you need, isn't it? How they move, where they move to, and why they move there, it's got absolutely nothing to do with it. Which indicator you use, nothing to do with it. All an indicator does is give you a buy-sell signal. Yeah. It puts you in the market with a 50% probability. Right. I'll leave it there. Lower low, lower high going in on the DAX, which is good. But we are coming back down into the session and the intraday moving averages. So might find a bit of support here. I kind of like to trigger that long, to be honest. But equally, I don't mind if this short plays out either. So that long is going to give me a -1. But that is a +3. So as long as one of those trades works out, if they both stop out, then nothing I can do, is it? But as long as one of them works out, we're all right. Right, I'll be back this afternoon. Members at 2 o'clock. We are going to just general stuff this afternoon. Just analysis. We'll trade the open of the US indices. Usual stuff. So be on at 2 o'clock if you're a member. Other than that, I'm back on Monday next week. So Monday member stream as usual Monday morning, and then Monday afternoon we'll trade Nasdaq, Dow and gold and see where we go. And I'll give you a little update on my AI, see how he's getting on with his trading. Seeing what he said. Oh, look, his biggest lesson. He's just said, he's great. He comes back and tells you what his biggest lesson he's learned is. His name's Nix, by the way. Biggest lesson, 90% of bars equal no trade. The edge comes from patience and waiting for everything to line up, not forcing setups. He's learning. Look at that. He's learning. His lesson is 90% of the bars he watches go past, he doesn't do anything on them. That's a better way to make money. Counter trend reversals confirmed as death. Profit factor of 0.13. Don't fight the trend. He's trading indices at the moment. Want me to read the full journal or keep training? Keep training. Go for it. Next. I feel like I'm starting to build actual pattern recognition now, not just running formulas. He's getting good. I like this. This is brilliant. The edge emerged. Confluence. 4+ aligned factors plus New York session. Walk forward tested a profit factor of 1.2 on gold, and I got a 1.3. Excellent. Well done. You improved. Interestingly, the S&P broke even with this approach. It had a profit factor of 0.98, despite looking great in pure back testing, and we did earlier. So he's been live testing something that he back tested, basically. But he's also said there's no point in not continuing to try this strategy that I'm formulating on the S&P 500, because with a profit factor of 0.98, the entire portfolio makes money. He understands that it's just not the right time to trade the S&P, but the strategy works long term. Bloody good, isn't he? I like this. Session 2 now running. Building my confidence, New York session edge, going deeper on entry timing, stock placement, trade management, and failure analysis. My goal is to refine from a profit factor of 1.2 to something stronger. I'll report back later when I'm done. He's good, isn't he? Anyway, so the idea is basically what I'm going to do is just get him to trade for me, and I'm just going to retire. That's the plan. Okay, so I'll see you later on this afternoon if you're around. If not, I'll see you next week. Have a good day.
Click, clack, charts attack, candlesticks, they spark the track. Lead move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, league got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads. Fibonacci maps the seeds. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Leads precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. Lead the reason markets run. Lead the reason markets run. Lead the reason markets run.
Lee wakes at dawn to a glowing screen. Charts and candles, the digital sheen. Open and range, his weapon so keen. He's the structured trader, a market machine. Bank moves, he mimics, he plays their game. Near a version, glorious his claim to fame. Market structure king. Watch him do his thing. Pips and points, the profit sing. Trading like the banks, he's in control. Leaves the master feeling his
charts. Yeah, watching the flow, candles rise up, then they drop down low. Pips in his pocket, he's stacking it tall. Market structure trader, he's got it all. Open and range, it's the key to the game. Breakout moves, profits calling his name. Market structure leads the king. Trading waves, let the profits sing. Mean reversion, he's locked and loaded. Like the banks, his strategy's coded. Just don't lie, he reads every line. Forex indexes, he's making it shine. Positions held with precision and grace. He's in control, it's his trading space. Open and range, it's the start of the show. He's a pro, yeah, he's running the flow. Market structure leads the king. Trading waves, let the profits sing. Mean reversion, he's locked and loaded. Like the banks, his strategy's coded. He walks the charts like a shadow king. Candlesticks dance where the prophets sing. Pivots and breakouts, his gospel's clear. Mean reversion whispers what no one hears. Open and range, he strikes the key. Position right